Okay, here we go. Just before we get going, can someone please just give me a sound check and a screen check just before we get started to make sure that you can hear me okay and that you can see my screen. If you just like to type in the chat box, I'm getting out there okay. Just need to make sure that you can hear me okay. Anyone? Yes. Thank you very much. Great. Okay, we're getting out there okay. Right. First of all, I'll introduce myself. My name's Kevin Hunt, and I'm a Forex trader. I've been trading since 2015. I'm a price action day trader myself, although there's many different strategies that you can trade and many different methods. And you can see some short videos that I've made for TIS Forex covering some of those different methods of trading. Now, for me, trading was all about freedom. It was about breaking out of the norm. I was living in London. I was stuck there at the time. I couldn't really do too much about it. My partner's from Thailand, and we both wanted to move away from England and come over here and live. And it's Forex trading that actually gave us that opportunity to do it. Like I say, 2015 started trading, and 2000, when was it? It was 10 years ago that we moved over here full time. And it is all thanks to trading. Hi, Mike. Welcome to the group. Welcome to the room. Good to see you in here. And anyone else, if you've got, as we're going through this, and I'll mention this as we go through, if anyone's got any questions at all about their trading, if you're getting fresh into trading, you can ask any questions you want about that, getting into trading, the methods that I trade. And, if there's anything that you're not sure about regarding the platforms that you might be trading, shoot those questions across and I'll see if I can help you out. I actually use the MT4 platform myself. And so I can help you out right down to the fine detail with that. So yeah, trading for me was all about freedom. It was about getting away from that mundane lifestyle that I had back in the UK and being able to live out here full time in Thailand. Now, one thing that I will say, and everyone should understand, that coming into Forex, it's not the kind of thing where you're going to get in and suddenly within a few months become a millionaire and be living on a beach, putting your feet up and just working 30 minutes a day. I won't say it's hard work. It's not hard work at all. When you consider someone going out and digging a road or something like that, that's hard work. Trading Forex, it's more about the mindset. You've got to be so disciplined. You really have. You must be disciplined, because without any kind of discipline, without getting the correct mindset, you'll never make it as a Forex trader. Oh, by the way, I should mention the screen here that you're seeing showing 10:03. Reason for that is that I work with the London traders. I trade the London session and I work with the London traders, meaning traders mainly in Europe and in London. So that's why you're seeing this screen. My laptop's on London time, so that's why it's showing that. Okay, let's have a look. Any questions? Yeah, any questions at all, fire them away and I'll get those answered for you. So let's move on. Let's have a look at the chart. So what I'm going to do today, I'm just going to be going through the MT4 platform and giving you an idea as to, sorry, one second. I just need to remove something. Let's get rid of that. That's better. Okay. So yeah, this is the MT4 platform. I want to go through some things on here with you. And bear with me if you're not new to trading. If you're already working with this platform or any other platform, just want to run through the basics. It won't take too long. And also, while I'm doing that, we can pick up on any questions that are coming through. So, hi, Edward. Welcome along. And as I was just saying, Edward, just come in. Any questions at all? If you've got any questions at all about Forex trading, fire them across. And I'll do my best to answer them for you. So, okay, I'm going to start off with going through, like I say, with the MT4 platform. And then towards the second half of the webinar, I'm going to be showing you an actual strategy. I'm going to be showing you a trading strategy that's very popular. Lots of people use it. And I'll run you through that and show you exactly how this strategy works. But first of all, let's get onto this MT4 platform and go through some of the basics on this. So you'll open up a trading account with TIS Forex, and once you've got your account, then you can apply your trading account to the MT4 platform. which is what you're looking at here. You've got to have that middle ground. You've got to have something whereby your account with your broker can then be applied to the charts, to what you're seeing on screen at the moment. So this is the standard, this is the default MT4 platform that you'll see when you open up. Absolutely horrendous. Within a few minutes, that would give me a headache. So what I do, I actually change this over to my own settings, the way that I like to see the screen. So if I just come over here, I've got these presets already in place. So this is the way that I trade. This is the screen that I'm looking at. It's a 15-minute chart that I trade with. And some of these little boxes and that, and these are things that I've set up myself just to help me with the way that I trade. But that's the thing with MT4, is that you can actually set it up. You can actually set it up to how you want to look. Erwin, okay, Erwin, no, you're not late. He says, oh, am I late? No. Okay, well, just a little, maybe 5 minutes, but don't worry about that. We've only just got started, and we've just flicked over to the MT4 platform. And as I was saying to the others, I'm going to be showing you a strategy once we're maybe halfway through this live stream, this live webinar, showing you an actual strategy that many traders are using. Okay, so the MT4 platform, this is how I like to work. Very, very basic, plain, subtle colors. So if you're sitting there in front of the chart for any given amount of time, very, very easy to work with. Now, when you're working with these platforms, this is a demo account I've got open here, so I can play around with it. I can place trades, do whatever I want. I'm not going to talk about the strategy on this. I'm just going to show you some of the functionality of how you can get in and out of trades, get positioned and things like that. So with something like this, okay, the way I trade, I'm looking at this price movement. This here is the Asian session. Seeing that price has dropped down. Okay, if I'm looking to get into a position to the downside, which is the overall trend that we're seeing here, and these are 15-minute candles, by the way. Each one of these candles is 15 minutes. Hi, Edward, welcome, and thank you for joining us. Thank you. So let's have a look. So I'm just checking as I go through, making sure that I haven't missed anyone. No, that's fine. Okay, so I'm looking for this to move to the downside. I want to take a position whereby I'm preempting. I'm looking for the probability of this position to carry on to the downside. So there's a number of ways you can do this. You can actually punch straight into a trade by just coming up onto the actual taskbar at the top here, and you can buy or sell. So we're looking for a downside move. I can just hit this button here. This gives us the volume, which gives you the lot size that I'm trading on this. I can hit sell, and there the trade's placed. So I'm now in this. I've taken this short, and I'm looking for this position to go further down. Like I say, I'm not actually worried about the result on this. I'm not working with my specific criteria. I'm just showing you the workings of this platform. So you're in that there. If you want to, you should always work with a stop loss. Risk management is so important when it comes to trading. And to put a stop loss in, if this is moving down, I'm looking for it to move down. If it comes back against me, I can just pull this up, and that's my stop loss in place. Once you've got it there, you can just hover the mouse above it, and that will tell you 10 pips, 10.1 pips. That's what my stop loss is there. So if this trade goes against me, it'll hit my stop loss and it will knock me out for a very, very small loss. Okay. And the other thing you can do, once you've got a position in, you can just drag this line again to put in your take profit. So dragging it down there, like I say, I'm just working with assumptions here. Hovering the mouse over that, you can see that's 43 pip profit. So you set that to whatever you want, whatever your criteria you're working with, the strategy you're working with, that strategy will determine what your stop loss will be and what your take profit will be. If ever you, let me just get rid of this, close that, right click on it and close it if you want. If ever you start working with a strategy and they tell you not to put a stop loss on, please just steer clear of it, stay away from it. You can't trade with unlimited risk, meaning that if you take a position short here, okay, and you're looking for this downside move, but this trade starts moving up, and you haven't got a stop loss on, that could just keep going to infinity. It can just keep moving. It will wipe your account out. It will keep moving until you're absolutely flat broke. Your account's been cleaned out. So it's essential, absolutely essential, that you work with a stop loss. Which brings me on to the risk management, that you really need to, let's see what we got. Rodrigo, hi Rodrigo, welcome along. Any questions you've got regarding Forex trading? I'm just showing some basics on the MT4 platform at the moment. Any questions you've got about your trading, or if you're brand new to trading, just fire those questions across and I'll be happy to help you out. Hi there, Michael. Thanks very much for joining us. Okay, so without a stop loss, it's ridiculous. It's absolutely crazy. You're going to lose your money without a doubt. Without a doubt, because you will get trades go against you. Not every trade will be a winner. And it doesn't matter how good the strategy is that you're working with, you will always take losers. Not every trade is going to be a winner. And it's something that I always tell the people that I work with, the people that I teach, is that you'll never become a winner as a Forex trader until you can accept taking losses. And it's strange. As children, we're taught to win. We're taught to not get things wrong. We're taught to get things right. You take a position short on this at the moment, like you're looking for this to continue down. The moment you take that trade, no one knows which way this is going to go. It could just go sideways throughout the session. It could go your way and give you a win, but it could quite just as easily go the opposite direction. And you're wrong. In a sense, you're wrong, because the trade's gone the opposite way to what you anticipated it doing. And it hits your stop. You've got your stop loss there. You get knocked out and you lose a few pips and you lose some money out of your account. Now, the obvious thing, and everyone feels it, is you feel disappointment, you feel down. And some people even sink into depression. It really affects them that much, especially if they're trading big accounts with big lot sizes. But you have to accept these losses. You must accept losses before you can win as a Forex trader. And the actual winning, the way you make money, is that it becomes, with your risk management, it becomes a game of probabilities, whereby I work with a minimum of a 2-to-1 risk to reward, meaning, let's clear this off. If I take a position here and I take it short, as I say, this is overall moving down, okay? If I took this short, excuse me, I'd be looking... Can someone clean that? Can someone clean that comment off, please? Anyone who's admin. So getting in this short, okay? Looking for this to go down. Yeah, looking for this to go down. I'm looking to take this short, okay? It's all right. That comment there has just thrown me. I'm just, it's amazing the people that you get out there. It really is. Anyway, thank you very much for removing that. You'll always get one, or maybe two, who knows? So yeah, looking for this position to go down. Okay. Now, I work with a 2-to-1 risk to reward. So if I take this position here, I might put in, and depending on the strategy that I'm using on that given day, I might put in a 10 pip stop loss. Okay. So if price comes up against me, I'll lose 10 pips. But my take profit will be 20 pips. It's a 2-to-1 risk to reward. So if it goes against me, I'll lose 10 pips. If it goes for me, I'll make 20 pips. Working with a 2-to-1 risk to reward ratio, you can be wrong more than 60% of the time and you'll still be a winner. And that's how it works. So you can be wrong more than 60% of the time and you'll still come out winning money. And that's why I say the risk management is so important. And that's the second element in trading. Of course, there's a strategy. You must have a strategy to work with, a tried and tested strategy. And you may even build your own. A lot of people actually sit there studying the charts, work out a way of using their own method of trading. And they'll use that. And very successfully too, some people. Second is the risk management. You must have that risk management element in place. And that can only be combined with the third element, which is the biggest part, which is mindset. And it's mindset that most people trip up on. And there's a massive amount of traders that just don't make it. People get into trading, they can't do it. And it's all about the mindset. They can't accept those losses. They can't accept being wrong. There's fear of missing out. You might see, there's a good example here. Let me show you this. So you imagine your strategy, okay? You've got this beautiful move to the downside. You're looking to get in short and take this further down. Suddenly the markets turn and keeps going up. Now, the strategy that I actually trade with is a good example. If this price moved up too high, I'd mark this as a range, that Asian session. I'd use that and I'd mark that as a range. Price is coming back up inside. Clear this off a sec. So that's the range that I'd be looking at. Okay, initially anticipating this price going down, then price turns and starts to move to the upside. Now, some people looking at this would see these big moves, guess, and it would be a guess, that this is going to continue to the upside. Okay, it did. But down here, when you're looking at it at this point and you can't see any of this part up here, it would be a guess. Okay, so price is moving up, and there's those people, they get fear of missing out. They see a price moving and they think, I should get in this long and just jump on board. Now, see, especially on a candle like this, a big move like this, and that fear of missing out kicks in, and they just jump on board. They completely ignore their strategy and decide to jump on board, and that is a surefire way of losing your account. You see, for me, with the strategy that I trade using, being a price action day trader, I wouldn't have been able to get into this position until price came through that upper range line there. You see, I'm looking at this price movement and I'd read this as a range and I could get in, I could take this long as price came through there. Now you imagine if I was sitting there watching these candles going up and I didn't have my trading under control, I'd be jumping on board and with fear of missing out. So it's those kind of things that you're looking at. It's those kind of things that you're going to be looking at regarding the mindset. And it also euphoria comes in. You might actually have an incredible winning day, an amazing winning day. And that starts to make you feel like you're on top of the world. Nothing can phase you. You're a trader. You're going to be winning. You're going to be making big bucks. You're going to be doing really well. That euphoria can be very, very dangerous as well. It can encourage you to overtrade, meaning that you're trading with bigger lot sizes than you should be. That's another surefire way of losing your account. And taking positions that you really shouldn't do. You think you know the markets, you think you can read the markets absolutely fine, and it just doesn't work. Again, that is down to mindset. It's down to mind control and you being able to control the way that you trade. Now, some people, they say, when you're a trader, you have to control your emotions. Now, for me, I just don't get that. The fact is, you will never, ever, ever, I don't believe you'll never control your emotions. You might be able to control the way you react to those emotions. You think about it, okay? You're taking a trade and you're losing and you're losing and you're losing. You might take 5 positions and each one of them is a loser. And if that happens, so I'm just reading the comments, and if that happens, you're going to feel bad. And if you're out of control, you know, that can really throw you. Now, the fact is, you can't stop that feeling. You can't stop that feeling of feeling bad. You'll be on a real downer. And sometimes it almost feels like you've got a physical pain inside you when you're losing money. You've been studying for months and you still think, I can't get this. It's not right. That emotion's there and there's nothing you can do about that feeling. But the fact is that you mustn't let those emotions affect the way you trade. Every time you take a position, you've got to make sure that that position is following the rules or the criteria that you're working with. Don't just go off on one and start trading all over the place. You must stick with the criteria. So if someone tells you to trade without emotion, I'll say it's impossible. Every human being, every living human being will be experiencing some kind of emotion every second of their life. And in trading, believe me, those emotions are flying up and down all over the place. It's like a roller coaster ride. It really is. 1 minute you're up, next minute you're down. And it can be pretty difficult. So expect that and you'll experience it, but learn to control the way that you, learn to control the way that you approach the markets and the way that you trade it. Just checking these comments. Erwin says, I'm a newbie at Forex, actually. Is it okay to start with $500, and how can I prevent losing? Okay, Erwin, as I was just saying, when you say losing, you're looking at losing the whole $500. If you were working with a good tried and tested strategy and you were working with correct risk management, you won't lose your $500. But it's easy to make mistakes. It really is easy to make, even when you're working with criteria. If criteria says, okay, if let's just try, I don't know, let's just try and draw this out. So if this candle here reaches this level here, then you need to get in here short. Now, you might get that slightly wrong. You might make a mistake with the strategy that you're following. That's just an example, by the way. You'll make mistakes, absolutely. But it's important. If you're working with correct risk management, you'll be able to hold on to your money. You'll be able to keep going. And it's only when you start to become undisciplined and you start to break the rules, that's when you'll blow your account. It is such a regimented discipline, trading. It really is. And it's absolutely essential to stick with that discipline. So no, $500, you can start with $500. Don't expect to turn that into $1 million within a few months. It's just not going to happen. But you can build gradually, you can build slowly. And as your experience as a trader increases and improves, you can add to that capital. $100 here, $100 there, spare $500 there. And before you know it, you can grow a reasonable size account. And of course, as your account size grows, working with your risk management, you can increase your lot size, which means you'll be making money quicker than what you were with the smaller amount. Simple as that. Michael says, Kev, are you saying we should focus more on our psychology than price movements? Absolutely. Absolutely. Yeah, that's the most important thing. What I'll do, in fact, I've got something up here that I can show you regarding that psychological element. If I can find it. Let's have a look. Sorry, 1 second. I just need to pause the screen for a second because I need to find an image that I had up on screen. Let me see if I can find it first. Sorry, won't keep you a moment. Just trying to find an image which fits nicely with what you're saying there about that psychological element. Okay, I'm just going to pause my screen for 1 second and I'll be back with you very, very quickly. Okay, just coming back with you now. And there we go. Should be back with you now. You should see my screen. Okay, can everyone see that? Just checking that you can see my screen with the charts again. There we go, we're back on. Great. Okay, now what I wanted to show you was this, and it absolutely fits with what we're talking about regarding the psychological element. If anyone asked me about help or where they could get help regarding the psychological element and the mindset side of trading, which is the biggest part, I'd say 80% of successful trading is about that. There's a guy called Mark Douglas, and he wrote 2 books. I've got one beside me here, The Disciplined Trader and Trading in the Zone. Now, I'd highly recommend anyone considering trading should read one or both of those books at some time while they're actually learning about trading and understanding what it's about. So important, it really is. So it's Mark Douglas, Trading in the Zone, or The Disciplined Trader. And these are 5 fundamental truths that Mark came up with. So true, it really is. So number 1, anything can happen, meaning when you take a position, anything can happen. It can go up, it can go down, it can go sideways. You don't know. And if anyone tells you that they know for a dead cert It's like a horse race. Unless you're actually in there nobbling the horses, if someone tells you they know that horse is going to win and they're an outsider regarding the organisation of horses, it's nonsense. Anything can happen in trading at any time, and no one knows what exactly is going to happen. It's made up of so many millions of people. So just bear that in mind. Anything can happen. Number two, you don't need to know what is going to happen in order to make money. Like I said, it becomes a game of probabilities, and working with correct risk management with those probabilities, you will make money. Number three, there is a random distribution between wins and losses for any given set of variables that define an edge. And that edge can be all kinds of things. And there's usually a lot of things that are thrown in to give you that edge. You're the main contributor towards that edge in you becoming a winning trader. You're the biggest part of it. Your strategy is important, your risk management is important, but those things you can throw them out the window if you're all over the place and you can't control the way that you're working. An edge is nothing more than an indication of a higher probability of one thing happening over another, which is what it's all about. You sit two people down, working the same chart, same time frame, working the same strategy with the same lot size. One is in control of the way he's working. The other, he's a bit emotional and he's all over the place. He's had a row with his partner before he came out in the morning and he's not truly focused. And that will give a big, big difference in the results at the end of the day. And number five, every moment in the market is unique. And that's absolutely true. There are not 2 nanoseconds while the markets are running that are the same as each other. And the reason for that, think about it. Let's close this down. You think about it. As you're trading, any moment, okay, you've got the big money players, you've got the big boys who are working for the big finance houses. I've got a friend who works for Merrill Lynch. He's based in London. He's trading a £500 million fund for investors. Now, just him alone moving in and out of the market can be a money mover, can be a market mover. And all of these things are happening. Plus, you've got thousands and probably millions of retail traders. I'm a retail trader. I'm not one of the big money movers. I'm not a big trader. And so there are thousands, if not millions of us retail traders coming in and out of the market at different times, making different decisions. That will vary the way that these markets move, whether they continue on a downside move, whether they go sideways like this, or whether they start to come in and make these upside moves. And it's the makeup of those people all over the world trading Forex at any given moment that make it so unique. Every single second is a unique moment, and you will never, ever see 2 moments the same. Absolutely not. Let's have a look. Can you see my screen now, Michael? Just checking. Got it. Okay, yeah, I can see the answer further down. Okay. So if anyone's got any questions, if there's anything that you need to ask, anything you want to ask that you're not sure about, if you're having problems with your trading, just fire those questions across and I'll do my best to answer them for you. Where are we? Let's just check on the time. Okay, right. What I'm going to do now, I'm going to move over to some other charts. Like I say, this is the chart that I use for trading. I don't use any indicators at all. All I'm working with is this grey box here. And all that does, it shows me when the Tokyo session starts and moving into the London session. I usually start trading around about this point here, just before London opens. And then I'll trade anything between 30 minutes up to a maximum of 3 hours going into the London session. There's other traders that I work with who wait until the markets move on a bit more, and they're ready for 9:30 New York time when the New York session starts. They're New York traders. Okay, these indicators up here, well, they're not indicators to get me in and out. It's just showing me the spread. It's giving me a candle time. And the strategy that I use, the candle time, is very important. But I won't go into that now. I'm not going to show you that strategy. What I'll do is I'll come over to these charts that I set up earlier. Now, these are weekly charts. Okay, and I'm going to show you a very, very basic strategy that many traders use. and they trade it successfully. They work it successfully. So for those of you who don't know, these are called moving averages, simple moving averages. Okay, what they're doing, they're showing you the moving average of price action as it takes place. This red line, if I hover the mouse over it, you'll see it's a moving average of 10. So it's looking back over 10 days, and the level of that at that moment in time is the average of the price move over the previous 10 days. The blue one, that's the moving average of 50 days. So a 10 and a 50-day moving average is quite a common pair of indicators for people to use to get in the markets. Now, this is about entering the markets. It's not really, well, it's not about getting out, because I'll explain in a minute how you actually take profit from a method like this. But what you're looking for, if you were trading this is on a weekly chart as well. You can do it on other time frames, but the people that I know who trade this, they're working with a weekly chart. It works well for them regarding getting entries, and they'll get more entries by doing it and be able to stick with moves for a lot longer. Now, one thing I must say, and I must absolutely emphasize this, is that this that I'm showing you is it's not a strategy that you should walk away from here and start risking your money on, laying your money on the line regarding this. You need an exact, precise strategy to trade, okay? I can't tell you, right, do exactly what I'm showing you now and you'll make money. I'm just showing you the basics of this moving average strategy that many people use, how it works, where they get in roughly, and the way that they start to take profit, the way they start locking in profit and taking money from the markets, okay? So it's just a risk disclaimer there that I'm not showing you a precise method of trading, but I'm showing you a method, a strategy that people use regarding these moving averages. Okay, so looking at the red line, which is the 10-day moving average. Let's get this up and working again if I can. Pen's gone dead. Second. That's better. Okay, so what we're doing, we're watching this red line, and that's the 10-day moving average. And we're looking for the point where it crosses the 50-day moving average. Now, in this instance, you can see price, let's drag this across a little bit. Okay, price has come up here. There's a nice move there. Now, at this point here, price has spun around and it started to move down. Now, this is the thing about what I was saying about fear of missing out. You can see that price has moved down from there, or even higher. It's moved down. Now, some people will be scared. They'll be worried that they're missing out on this move, but you don't. This criteria talks about the crossover point. So you're looking at this 10-day moving average coming through the 50-day moving average. That is the entry point now. If you were watching this and you were trading this method, you would take this position short as the 10-day crosses over the 50-day at that point there. So you're getting in on this candle. You'd set your stop loss. So you're getting in there. You'd set your stop loss to whatever your strategy dictates. You don't set a take profit with this method. Let me explain what you do. So price starts. You've got position there. So it's on this candle here that you got positioned. Round about there. And you've taken it short. So now you can see these candles coming down, they're coming up. This is the actual level where you took your position. Okay, the crossover was there. That's the actual level where you took the position, that price there. So price starts coming down. You've got your stop loss in place and you leave it to run. Once it reaches a certain level, again, it's about your strategy as to when you start moving. The stop loss, you start to move it at a given point as to what your strategy tells you, and you start locking in profit. So if you're working with a method that gives you a very tight level to lock in at, there's your entry point. Price has come down, come back up, come up. At this point, you'd still be in it. Price is coming down. Okay, now, if your strategy had told you to move your stop loss down to become a price stop, which means you're locking in profit. As prices come down here, that's great. But then price is moving back up. That candle there, or this candle here, would hit your price stop. And this is the profit that you would have made, just that small amount there. Now, this is something else that will get the emotions going. You've seen a move from there down to here. And the strategy that you're working with gives you a very, very tight price stop. Move your take profit into a price stop as quickly as you can. And because of that, you've not let it run. You've let it run this part here. The price has come back up and it's knocked you out at that point there. And then what's happened? Price has continued on this downward slide. Again, you're looking at this red line. It's not crossed back over the blue, so it's still on a downward trend. And you've missed out on all of this move. And again, you might have had a strategy that tells you to lock in sooner than that. So where were we? This was the entry point here. Okay, price has moved down. Let's have a measurement. Let's see what's going on. So there's the entry point. Okay, let's say price has moved down. Well, you can see it's a massive move, 200. By the way, let me show you this. Looking at this little marker, this crosshair, and it's the crosshair tool that I'm using up there. You put it on a point, you click on the mouse, you hold it and you drag it. The first number, 8, is showing you the amount of candles that you're moving. You see as we move 1, 2, 3, 4, 5 across there. That's the first number. The second number shows you the amount of pips that you're moving down. So right back up there, that's, if I can get it on it, you see 2.8. And as you move down, that's showing you more profit. 56, that's showing you the pips. So that's the second lot of digits. And to the right, you've got the actual price. That price is also showing up over here on the right-hand side, you'll see. Okay, so from that entry point, price has started moving down. You might have a strategy that says, okay, if this makes 50 pips, you lock in 20 pips, which would have locked in profit about there. In fact, what I'll do, let me do this with these lines. It's probably easier. So there's the entry point. That entry point, if you look over here, 1.1843. Forget the last figure, that's tenths of a pip. So small, it's not even worth looking at. Okay, so we're looking at 43. We're looking at price to drop down. If we say 50 pips, okay? We're assuming that the strategy you're using is going to let this run 50 pips before you lock in, say 20 pips. So we're coming down, that's 24 pips, 30, 46, okay, 50 pips is around about there. Okay, so once price gets down to here, which is 1.1335. Once price gets down to there, which you can see, you've seen that level reached in this area here, then you lock in 20 pips. Locking in 20 pips you'll see that move to that high there is 34 pips. So locking in 20 pips would have been fine with that type of strategy. So we're coming down 40, let's have a look. Around about there. That's where you'd lock in your price. Your price stop would go there, meaning that price has moved down. Once it comes down 50 pips, you can lock in 20 pips. Great, absolutely fine. Because although this has moved down and pulled back, you wouldn't have been knocked out. So then price continues to move down. And then you'll have, the strategy will tell you how to move your price stop down and keep locking in profit. So if you're in this trade and you got to a point where, pull this up, I'm going to move this down. So this is the price stop. Your strategy told you once price started moving down on this area here, you could start locking in more profit. So you start locking in the profit as it's moving down. Now you've got profits locked in there. Price then comes back up a bit further along and it hits your price stop just there. So you're knocked out, but you've taken profit. And let's just have a look. You're looking at approximately 351 pips. That's a massive move. That's a beautiful move. And you'd be out of the trade. And then, of course, what you'll do then, in fact, let me just quickly have a look and see if there's any comments I need to answer. Let's have a look. Omar says, psychology has indeed been my best weapon in these markets. It will be. Honestly, I can't emphasize it enough. Very, very important. It really is. Michael says, I've just made them realize that strategy is not the major key in Forex. Strategy is the minor. It's the minor part of trading. There's thousands and thousands of strategies that are successful. But without the risk management added to that and without the mindset, none of those strategies will be successful. In fact, there was a book written about, I'm trying to think, it was 5 trades. I'm trying to think of the name of the book now. What they did, they took 5 people at random from all different walks of life. These are big, big money managers, okay? And it was like, in fact, there was an Eddie Murphy film that was based on this story. It's a true story. So this big money management company, they took, I think it was 5 people from all walks of life, no prior experience of trading. And they sat them down and they said, right, if you can work with these strategies, and they all had the same rules, if you can work with these strategies, they were going to be guaranteed a cut of that money, and they were going to be given a big bonus on top of it. Now, each of those 5 people, or however many it was, they all had exactly the same set of rules. They were working with exactly the same charts. Everything was the same. The only thing that differentiated each of those 5 people were the people themselves. And there were a few, I think there was 2 or 3 that actually made it and they become successful traders. And some of them are still trading now. The others just fell by the wayside and they lost the money, and simply because they couldn't trade the rules and they were all working with the same thing. So yeah, and I know I keep emphasizing it, but it really is so important. How are we doing for time? 42. Okay, moving on. Let's have a look at this. So right, you've taken this position here as the 10-day moving average crossed over the 50-day and you took it short. Okay, you locked in profit down here somewhere. Price has moved down. Suddenly it spiked up and it's hit your price stop. So you're out of this trade. You're flat the market if we're just looking at 1 pair. There's nothing you can do now. Absolutely nothing you can do while price is riding like this. Because the only way you can take a trade working with these moving averages is on the crossover. Okay, so there's nothing you can do through all of this. You're missing out on all of this. Suddenly, price comes up. You've already missed these candles here. But at this point here, let's clear that chart off. Clear off, out of the way. At this point here, you can see the 10-day moving average has crossed over the 50-day moving average to the upside, which means you've got a long position to take. The trend's now towards the upside. And you can get in there, you can buy that position, you can get in there, which is, let me see. It's going to be this candle here. So you buy at that level there. Move these lines, and we'll redraw them. Okay, moving averages cross over there. You're going to buy on that candle there. You put your stop loss in place, just in case that price moves back. Moves back, you'll be stopped out. You'll lose a bit, but that's part of the risk management, and you've got to have it. You've got to use a stop with any trading. Okay, then price takes off, and you're in this now. You're in this long. You're positioned. You've got your stop loss in place. Price doesn't come anywhere near that. Your strategy is telling you to start locking in profit at a certain level. So you move the stop loss to become a price stop, and you ride it, and you ride it, and you ride it. And all the time, you're locking in new levels of profit. Okay, you get to a point where your price stop has moved up to here. Let's say you've moved to here. You're watching this price going up. We're on these here. Price has come up to here. You move your price stop up to this level. Again, determined by your strategy. Price is starting to ease a little bit here. And then suddenly this price comes down and it plummets straight through on that one candle. It's a weekly chart, sorry. Price comes down and it comes through your price stop. Okay, you're now out of that trade at that position there. This was your entry point. So let's take a look at that. That's the level you got in it. That's 521 pips. Again, a massive profit. A massive profit. When I say a massive profit, I'm talking about percentages. If you're trading with a $500 account, as who was it? Yep, it was Erwin said that talking about a $500 account. Okay, you're trading with a $500 account. Monetary wise, you're not going to be looking at fortunes in money, dollars, but percentage wise, you look at the percentage. Working with a reasonable risk, a reasonable lot size, you look at the percentage of win that you would get from that kind of move there, 527 pips. I'm trying to think if I can give you an example. No, I can't because I've not got my live charts open, and I can't really disclose all of that because it's got my account numbers and everything on there. But believe me, if you were working with a reasonable risk management and 520 odd pips, it would give you a fantastic percentage return on your investment, what you put on that trade. And that's what it's about. When I get a lot of messages, I get a lot of emails with people asking me, so how much can I expect to win trading Forex? It's an impossible question to answer. If someone's trading with a $100 account, and someone's trading with a $500,000 account, you make 7% in a week. I'd say that the traders that we work with, on average, the ones who have actually got it and are working and trading profitably, they're probably looking at about 7% a week, something like that. So you look at 7% of $100 that someone's trading with, as opposed to 7% of $500,000. The monetary value can't be given. That's why I only ever work with pips. And you look at my Twitter feed. If anyone's interested, you can find me on Twitter at UK to Asia. And every day that I trade, every time that I take a position, I post on Twitter. And you look there, I'll post the pips that I make or lose. I lose some days. I don't win every day. And it's that I can work with. I can work with pips. I can work with percentages, because that is the only real way you can relay it to someone as to what their wins or losses will be. So you listening to this now, whoever you are, you know that you're going to be trading with a $1,000 account. And if I tell you, okay, I've made X amount of pips and today I've made 3% on my capital. If you were trading the same strategy as me, you know what that 3% equates to of your $1,000. It's as simple as that. So someone who throws the question out, how much will I make as a Forex trader? It's a bit of a nonsense question, really. You can't, it's impossible to be able to give a fixed figure on it. So moving back to these charts, like I say, this is the moving average crossover strategy that I'm showing you, working with a 10-day moving average, the red line, and a 50-day moving average, which is the blue line. And it's as simple as that. You can go back through history on any of these. Where are we now? We're on June 2014, looking back here. And again, if that red line, 10-day moving average crosses the 50-day, at that point there, you take it short, and you can see how the price has moved down. At this point here, it started to move up, and it would have been around about there that price stops would have been hit and profits would have been taken. But as I say, let's look at the downside now. If I can give you an example of a downside, because there are downsides. Yeah, there's a good one. Let's have a look. I don't want to paint this as something shiny and unrealistic. I've got to be realistic about this because, like I said right at the beginning, you've got to learn to lose before you can win. You will lose, but the idea is that the losses are smaller and the wins are more often and bigger, and that is how you make profit as a trader. So, for instance, you've got a crossover here at this point here, and it's the red line crossing to the downside over the blue line. So the 10-day average is moving down across the 50-day average. You'll have taken it short if you were trading this strategy at that point there on that green candle. Okay, so you'll have taken the position there, short, looking for downside move. The next candle, which is a weekly candle, the following week, okay, is spiked up. Now, the chances are that spike, depending on the strategy you're trading with, you take that position, you'll have had a stop loss up here. And there's a perfect example. You're in, you're short, this is your entry, looking for it to move down. Price came down, but spiked up. It could have been a news event, it could have been anything that made that spike up. And it hit the stop loss. So whatever your stop is, your predetermined stop loss, and that's something you'll know exactly what it is before you ever take a position. You must work that out. Your stop loss would have been hit and you would have lost money there. Simple as that. So you will lose, but like I say, the right risk management will ensure that your losses are less than your wins. Any questions? Let's have a little look. Let's have a look. Okay, so we've got a question from TikTok. Okay, the question on TikTok: am I using a one day tick frame or a 1 day time frame? No, this strategy here, I'd use a weekly time frame on this. It gives you I don't know, it spreads the charts out enough for you to get a good overall picture as to what the price is doing, and it gives you a good chance to get in there long, to get in short there. It just makes it very easy to read. If I bring this down, in fact, what I can do, I can bring this chart down to lower time frames. You're asking, is it a 1 day time frame? So that's a 1 week. Let's bring it down to a 1 day time frame. That's not too bad. You could quite easily and successfully trade this same strategy using a 1 day time frame. You start to come down lower than that. That's a 4 hour time frame. See how it sort of like levels out? Okay, you can stretch. No, you can't. So you can see it's very, very hard to read. 1 hour time frame. It's just all over the place. It's a mess. I wouldn't recommend trading this, anything like this. 30-minute time frame, again, it's just like it's crazy. It really is. 15 minutes. There's a few options there, but again, I would never ever trade this strategy on this lower time frame. 5 minutes, forget that. You'd need a magnifying glass to see it. So I'd recommend anyone attempting to trade this a weekly time frame. But again, it's going to be determined by your strategy. Whoever you're buying a strategy from or you're paying for coaching from, they'll tell you what time frame to use with these moving average crossovers. They'll tell you exactly what to do. Hi, Michael. Michael says, so we shouldn't move our stop loss at all. Oh, yeah. Oh, okay. There's two ways of looking at that. So you take, in fact, I'll just draw this on a plain piece of chart. It's going to be easier. Okay, so you're looking at a chart and price is doing this. It's moving up, pulling back, moving up, moving up. Okay, you take a position on a pullback. You buy at that position there, at that level. Okay. You'll set your stop loss with me, I'll work with a 10 pip. In fact, I'm going to cross over to my charts. It's going to be easier for me to explain this. Okay, euro US dollar I'm looking at on my charts. Right, if I was going to take this short, and in fact, I'll do it. Let me do this. Let me take this short and I can show you exactly what I'm going to do. I'm going to sell the market. Right, I've got a pullback there. And in fact, this is, and I'll let this little bit of information out because there's people paying a lot of money for this strategy that we use. That candle there, as price on the next candle comes through it, there's an entry point and it's to take it short. Okay, so I've taken it short. First thing I do is I put my stop loss in place. I'm going to move that to 8 pips. So euro US dollar, I've got an 8 pip stop loss that I work with on this. If that price hits that stop loss, I'll get knocked out. Simple as that. If this price starts moving down, I'll wait till it reaches approximately 15 pips. And then I'll pull this stop loss down to lock in a couple of pips, which will cover my broker costs and everything. So that way, if this price starts moving down, let's say it moves down 15 pips, I lock in at this level here, 2 pips. If price suddenly reverses, I'm out of the trade and I haven't lost any money. And that's when you move a stop loss. However, there's some people with that fear of loss and who don't want to be wrong. They'll see what's happening at the moment. This candle is moving up. And if this candle continues to move up, they can't accept they're going to lose. So then what they'll do is they'll grab that stop loss and they'll say, right, 8 pips. I'm going to move it up a bit more. It's going to be 16 pips. And it's not what you do. You've already got the predetermined level of 8 pips. And if price hits that, you're out and you have to accept it. I can give you another perfect example of that mindset. Oh, yeah, it's going in my favor now, so I'm actually in profit. But so yeah, you don't move a stop loss adversely. You don't move it to make the stop loss bigger. Absolutely not. You stick with your strategy. But once price starts moving down, you can move that stop loss. Once you bring it below your entry point, it becomes a price stop, meaning that if price reverses, it will stop there and you won't lose any money. Okay, hope that answers. Love the strategy. It's a good strategy. Not this one. I'm not giving you any details on this because, like I say, it's the one that we work with members on. And if you can email me, at. I'll give you the best email anyway if anyone's interested. But you're welcome, Omar. But the other one, the working with the moving averages, this one, it's a tried and tested strategy that a lot of people use, but you apply a strategy that predetermines your stop loss and where you start locking in profit. How are we doing? 57. We've only got a couple of minutes left. Right. So what I need to do, there's a competition, and anyone who contacts Tis Forex on Telegram, and they put in the word silver, they're in with a chance to win the competition. So go to Tis Forex Telegram account, type in the word silver, and that will give you an entry into the competition that they're holding. And I'm not sure what that is this week. I haven't got the details, but you'll get all the details on Telegram anyway. But it's that simple. It's not difficult. Go into Telegram and go into Telegram, go onto their account and use the word silver, and it will enter you into that competition. Okay, we're almost out of time. Any more questions? We've got 2 minutes left. Any questions that anyone wants to fire across? I'll put my email address up just in case anyone wants to contact me about the strategy that I'm actually working with. Oh, there you go. If you look in the comments box now, is it on there? Contest questions. Okay. Okay, the questions are on there. Let's have a look. Ah, there you go. There's a link there. Click on that link. The TIS FX link, and that will give you all the contest details. And like I say, if anyone wants to, let me just type this up. So if anyone's interested in the strategy that I trade, this isn't the strategy that I actually use. I'm working as a price action day trader with 15-minute candles. you can get me at, I'm trying to think. I'll tell you what, the easiest one is, so it's going to be, let me just pull back a minute, sorry. The latest email that I use now for everything. It's, so we've got info@greenbitcoinfarm.com. If anyone's got any questions regarding the strategy that I use, you can get me there. Fire an email across any questions. I'm happy to help anyone out and answer any questions. Any other questions coming in? It doesn't look like it. Let's just check the time again. That's it. We're out of time. Thank you so much for attending. Really been enjoyable. Great working with you guys, and look forward to the next one. Thanks very much.